looking for a little color about what your moves mean here. You're moving some operations out of New Jersey on a temporary basis, but if you were to move them in full, how much is moving out of New Jersey?
Well, thanks for having me today, and it's an important discussion to have. Today's announcement, where we talked about moving a particular market to Chicago, really is a reflection of the ecosystem we're part of, with other broker-dealers and exchanges, where collectively we are going to take action and make sure we evaluate all options to protect end investors. So if there's going to be a drag on investments for end investors, or there's going to be an increase in trading costs for end investors, it's our fiduciary responsibility to consider all options, and that's what we're doing now. But we do empathize with the situation that New Jersey and other states are in, but at the end of the day, we do need to protect end investors across the entire country.
So, Tal, but how much is actually moving here? You have operations in New York. Is this a lot of people in terms of headcount? Are you moving any jobs? Or is it the transactions themselves? And how much money does this amount to that will be moving out of the state?
So we've been part of the New Jersey landscape for a long time, and as most of the industry. And so we have employees that live in New Jersey. We have a data center. We have businesses that are in New Jersey, and so do other exchanges and broker-dealers. But today, with emerging technology like the cloud and other technologies, it's not that difficult to move, but we want to move together collectively, because there is productivity when we do that. And so that's what this is about. It's about the entire ecosystem, trying to figure out how we do that together in lockstep, while understanding the risks involved. And for us, once again, we're driven by the North Star of, if investment costs are going to go up and trading costs are going to go up, which would impact the market, especially during a time like this where you have a lot of volatility in the market. And so the crisis is impacting all different parts of society, but the market in particular. We need to make sure that we're taking the right action on behalf of investors.
Tal, is this a kind of horse trading that's going on? Are you in discussions with the leadership in New Jersey, with the governor? Do you think this could come into some sort of game of chicken?
I hope not. You know, we are part of the New Jersey landscape. Like I said today, we've been there for a long time. We want to pay our fair share. We have employees and businesses in the data center that I mentioned earlier. But I think if we took a step back and we looked at financial transaction tax, they don't have a positive history. They generally don't allow you to collect what you project, and they could leave the state or the country in a worse off position. And so we're trying to educate, raise awareness, and I'm sure there are other solutions that we can pursue, but the idea of a financial transaction tax, it hasn't worked in countries like Sweden or when it was announced back here in the US many years ago. So it's more about, fundamentally, is this the right thing to do for New Jersey and our country?
So, Tal, I mean, there's a lot of data on the financial transactions taxes that shows they don't necessarily produce the results intended. Most states right now are dealing with pretty big deficits. Obviously, you have a federal deficit that needs to be dealt with as well. This is a New Jersey issue that we're talking about right now, but you're moving, or you're at least testing out a state in Chicago, in Illinois, I should say, where they've also considered similar measures. I mean, that LaSalle Street tax, I feel like, has been talked about for the last decade. And I'm curious as to how much you think you could outrun this. Are there states out there where this would not even be on the table? Because it's certainly not Illinois.
It's a good question. So first of all, we see this as a nationwide tax. So this could tax individuals in states all over our country. So while it's focused on New Jersey and transactions on New Jersey, it's really a nationwide tax on end investors across the country. So when we think about that, and you mentioned Illinois, and that's where we have our backup facility today, it's quite easy for us to consider other states as well that might be friendlier or welcome that business and our business and the industry with open arms. And there's a number of states that have reached out to us behind the scenes to say, if you're thinking about that, let us know. We've taken the attitude of, we first want to work with New Jersey. We want to educate New Jersey. We've been there for a long time, but it is portable. It is It has a high level of mobility, and that's something we're going to have to consider.
Tal, let's talk about the markets for a second here. Volatility in the markets and also this elevated options trading. How much are these things going to be features of the market into the rest of the year?
So you alluded to the uptick in options trading. It's almost up 40% year over year, and we've seen retail up just about 100%. And it really shouldn't be a surprise because options serve as a great hedging vehicle, great risk transfer, risk mitigation, risk management vehicle. And with all the uncertainty we have in the market today, whether it's the crisis, the election, the trade wars, the impending recession, more vulnerable parts of our economy, I think options structurally are well positioned to allow investors to manage that risk. What I would also say is during this elevated levels of activity, markets have functioned extremely well. We have not seen or had any concerns with resiliency or capacity. And so it's been fairly orderly given the amount of volume and activity we've seen.
I want to ask you about the IPO market as well. It's been red hot. You saw the pop with Snowflake yesterday. Are IPO markets being rational right now?
Well, it depends on the type of companies that are coming out, but there's clearly investor appetite for new economy companies. You saw JFrog on Nasdaq yesterday. You mentioned Snowflake. So I think there's investor appetite. We see that, quite frankly, with the Nasdaq 100, where we've seen steady inflows throughout the entire year. So new economy companies are definitely in vogue. I think the IPO market is, as you know, pretty strong right now. Our win rate has been 84% if you exclude SPACs. So I think that will continue. We'll see how it leads up to the election and what the election's impact will be on the market. But there's clearly appetite for IPOs, especially new economy IPOs.